Welcome to Friday, the 22nd of February. I want to start off with this free video today by looking at a daily E-Mini S&P 500 chart and show you where we're at and what we've done so far. Now remember, this right here is the first trading day of the year. Okay, so we got a big gap from the 31st of December 2012 up to the opening this year. As you recall, the market's been steadily moving higher all year long, right? Market topped out just a few days ago right here. And look at yesterday. Okay, yesterday nailed a big fib level right here. Look at the market hit the 38.2% retracement from this year's low to this year's high so far. So yesterday was actually a good opportunity to kind of get back into the market after seeing a big sell-off here a couple days ago. Look at this. We got a nice sell-off. A real nice sell-off. In fact, the market took out, I believe, the last 7 bars lows. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Yeah, 7. Took out the last 7 bar lows. I mean, as you recall, the market's been kind of just slowly stair-stepping higher, but this is good. This is healthy for the market to sell off, right? We need a couple of days where the market gets killed, right? It's got to reset itself, right? So then yesterday, as you see, the market fell down into the 38.2% retracement where you should have been looking to buy. Okay, so the question is, well, what stocks would you buy, or would you, if you're day trading the futures, then you're looking at an intraday opportunity to go long. And actually yesterday was a great opportunity to go long in and around that level, because on a 3-minute chart, which is the chart that I personally use to day trade the futures, had a beautiful setup near that low of the day, which happened to be the 38.2% retracement of the bigger swing of the year. Okay, now I want to show you 3 stocks that I'm actually looking at. Actually, I am long one of those stocks right now, and I'll show you exactly what I'm doing. Let's get right to it. All right, one of the stocks I'm looking at is PPG Industries. Okay, this upper chart is a weekly, and this is a daily chart down here. Okay, let me show you exactly what I've done. Now, if you take a look at this, you'll notice that all the bars are green, right? Look at a weekly chart. Market's been up. Daily chart, right? All green bars, uptrend, right? Now, you've seen these before. These are the blue action zones, right? Blue action zone on a weekly. The hot pink is a 50 exponential moving average on a daily down below, right? The 50 exponential moving average at 200. Then I've got my gray action zones here. Now the market is pulled down, right, from these highs into, on a weekly chart, if you'll notice right here, back into the blue action zone, right? And on a daily chart, obviously the market's broken down through the blue action zone, but of course the blue action zone disappeared. Okay, so we're not, the one thing here is the market is starting to break down through the 50 exponential moving average, but right here we are at, on a daily chart, we're at the last area of support other than the 200 exponential moving average, which would be way down here. Okay, so we're in between the blue action, or the gray action zone right now. So this is what I did. I went long as the market penetrated up through yesterday's high. Yesterday's high was 130.65, right? So as you already know by now, trading a stock over $100, I like to use at least a 20-cent penetration. So I went long today, 20 cents above 130.65. So my long is at 130.85. Okay, and my initial catastrophe stop loss on this trade when putting on the trade was below the prior bar's low at 128.20 was the low, so my stop is at 127.95. Okay, because 20 cents below 128.20 is 128. Even as a round number, I never want to stop myself out at rounds, so I went 5 cents below 28, even to 27.95. So if you do the math on that, if I am long at 130.85 with a stop at 127.95, I am risking $2 And what am I risking? 27, 28, 29, 30. I'm risking $2.90 on this trade. That's it. $2.90. Now, it doesn't look like the market's going to take out yesterday's low. So what's going to happen here is I'm going to be able to move my stop up on Monday to probably below the low of today's low. Today's low is 130.10, so I'll probably bring it up. But I'll let you know first thing before the market opens on Monday. I will put together a video and tell you exactly where I'm adjusting my stops, if anything, on Monday morning for this trade. But this is the trade that I am currently in, the PPG. Okay, again, I'm long at 130.85 with a sell stop at 127.95. My first objective, where I'll take some profits off the table and move my stop at least to break even, is if I'm risking $2.90, I'm going to add that back to my entry. So that gives me a price of what, 133.93. But I'll go through that in more detail on Monday as well. All my objectives to the upside on that. So currently I'm up almost a full point in this. Not bad. We'll see where it takes us. And then let's get to the next trade that I'm looking to set up on Monday. Remember Salesforce.com? CRM? Take a look at what's happening here. Okay? Look at what's going on. Weekly chart, as you can see, is in sync with the daily. We've got the green price bars denoting uptrend on a weekly. Same thing on a daily. Okay? Remember we took this trade, hit the profits up here. That was nice. Look at this. We're actually back. We've tested this low here. And we're actually back to the 50 exponential moving average down in here. Excuse me. So what I'm going to do is I'm going to wait. Here, let me enlarge this a little bit here. I'm going to wait for Monday because it looks like today is going to be an inside pattern, right? The market's high. Today's high is lower than Friday's high, or Thursday's high, and the low is higher than Thursday's low, right? So we've got an inside pattern. So on Monday, assuming today's high is in place already at 170.55, if that's the case, I'll be going long at 170.75 on Monday. 170.75. So that's one trade I'm looking for on Monday. And then one other trade I am looking at and contemplating here. Take a look at this closely. Now we've got the weekly and the daily apart, right? They're not jiving. Now this is Yum, right? Yum Brands, right? Look at the weekly chart up here. All green bars. Trend is up, okay? Granted, the market came up and tested this high. Pretty much failed off that high here, and we're down. Excuse me. But this is what I'm seeing. Okay. The daily chart, of course, trading purely off a daily chart. The trend changed down right here, right? Green to red right here. So what you'd want to do here is want to sell it in here. This is a beautiful area in which you'd be looking to sell this market, right? Back up into the gray action zone. 50 exponential moving average came down, made a new low, rallied up, another nice sell. A lot of nice trades here to the downside. What I'm seeing here, though, is even though the weekly is conflicting with the daily, I'm still really contemplating taking a trade because this is what I'm seeing. Take a look at this right in here. Look at this. Now, again, this is a weekly, right? Look at that bar right there. Open and close near the high of that week with a large range. I would say this range, the week of February 8th, look at that range, okay? Almost a 7-point range. That's the largest range that you saw until right in here. Plus it opened and closed. Look at the open was 65.90 and closed at 65.30 with the high of that week at 66.01. That's very bullish. I call that a bullish blow-off bar, okay? I call that a bullish blow-off bar. That's pretty powerful. And then the following week, we had an inside weekly pattern. Lower high than the prior week, and the low was higher than the prior week. Okay? So my thought here is, if the market starts to break up, right? If the market starts to break up through the high of the inside pattern, this market could go a lot higher. Okay? So I'm not long just yet. I'm contemplating. I'll probably take this trade in the morning on Monday. We'll see. But technically, look at, if you go 20 cents above the high of last week of 65.19, 20 cents above at 65.39. Well, today's high so far is 65. Or is it, this is the week, 65.43. I'm not long this trade yet. I'm contemplating taking it. I'm kind of torn. Obviously, one of the reasons why I'm torn is you've got on a week. I mean, look at the daily is conflicting with the weekly, so that's what I'm a little torn about. Okay, look at the daily here. We've got the 250, the 200 exponential and the 50 exponential right in here, acting as potential resistance. Okay. Then we've got the week, then we've got the gray action zone here. So we've got some resistance in here. The market would have to move up through it. So again, I'm just contemplating putting this on. I'm just not sure. I'll probably wait for Monday to see what occurs. But if I do take this trade, I will let you know, and I will have relatively tight stops. So for example, let's say I don't do it today. What time is it right now? It's 2:30 in the afternoon. I probably will not put it on before the weekend, so I'll leave this alone, okay? So I'll tell you on Monday what I'm going to do, but I'm going to be looking to buy up through today's high by a minimum of 10 cents. Once I do that, my initial stop loss will immediately go below today's low. So let's just pretend the market's closed now. So my plan of action would be to go long at 65.56, which is 10 cents above today's high, and my sell stop would be at 63.83, 10 cents below today's low. So I wouldn't be risking too much, less than 1.5 on this trade, almost about 1.5. That's all I would be risking on this trade. All right, so that's where I'm at. Hope you have a great weekend. I will be back with you on Monday, and hope you enjoyed it. Have a great weekend. Bye for now.